let's define the trade swing first. We have the intermediate term trade swing and the intraday trade swing. So what's going on right now is this corrective move. We all remember that diamond formation, and that the market at some point is going to 1.34. All right, but before going to 1.34, this market is showing a retraction to 1.29. Very clearly showing because of the negative momentum that we're seeing. We've been through the label several times, so probably correct. There's an A and a B, there's another A and a B, and we're doing a C, but doesn't mean that we cannot do retractions. Next retraction is 1.29 before we are able to move higher to 1.34. Overall, it will be doing, of course, an inverted head and shoulders inside of the diamond, but that's not of any consequence to us. The current leg is an A, and A takes us to 134, that A here, or 133, before we retract back into a B. Let's take it to the daily. This is what we're seeing today. This is today's daily chart. Remember, there's an A here. So this is done a 1 and a 2. It's going to be doing a 3. It's going to be doing a 4. It's going to be doing a 5 all the way to 134. A relates to 3, 4, and 5. That's why we are showing it here now. The correction is right now probably like 4 into high degree 3. And this means we get to see 130, 1.3, 1.2970. There's going to be an A and a B and a 4C. C takes us to 129.05, the same level we're seeing on the weekly, or takes us to 130. This week, we are just going down probably to 1.2970, bounce out of level 1, move higher back again to 132. Take it to internal trade management. This is today's 4 hours, and we're getting a retraction out of over both levels, should bounce above indentation level 2. Let's take a look at the labels. We have a 1 and a 2 Roman Italic, 1 and a 2 English, 3. We're doing 4A. We're going to be doing 4B. We're going to be doing 4C. Either 4C is higher than 4A, and then we do a 5, or 4C is lower than 4A, and then we do a 5. We believe we're doing the same fractal as this wedge. We have a wedge here and a wedge here. Right? What you're seeing right now is this correction to sell into all the way down to 130, 129.90 showing here. This very small correction going up. Want to sell into it probably on dollar strands takes us to 1.3, 1.2989. We're going to compose either a double head relating to that shoulder or a higher head to this head, still all relating to that shoulder. Define now what we're going to be trading this week. It's the move down to 1.29, this move here. This is, of course, repetitive, just to make sure we know what we're trading. Again, the move to 129.70 here on the daily. On the 4 hours, 130, 130, 30, 1.3030. Take it now to trade management. We're looking at this last Friday. Right, we're at dot 3, we're going to dot 1. Dot 1 is 128.90, but if this is a bullish market, we bounce out of level 3. So level 3 is 130, 129.87. We believe that is the top. The market does an A and a B, and is now will be doing a C. I believe B is currently in progress. Let's take it to today's trade management and the 2-minute chart earlier for short-term trading. This is today's trade management. We are seeing a 1 and a 2. We're seeing, of course, a 3, 4, and a 5. 1 in yellow, 2 in yellow. That is supposed to be going on as a 3 in yellow. The current bounce takes us to reject level 1. We want to sell it, and we should be taking it to 130, 1.2980, probably. I don't believe it is feasible to trade short term if we have trending pairs. We usually update it if we're going to be having a consolidation market across the board. All pairs are consolidating, so we do all the internals, so we know where to short and take 10 pip profit, 10 point profit. It shows, of course, that the market was doing way 4. Short it, will take just 10 pip profit before it does another 4C. All right, let's take it live. All right, is easy to take. I think should be quite easy for all of us now to take the entry. Let's just first highlight the labels that we are trading because this means we get to pinpoint where the current retraction is going. Now things are much clearer, right? So we're doing a 1 and a 2. We have an internal 1 and 2 at the neckline, of course, and we've had 3. That's all, and we're now doing a 4. I can also highlight this. Never mind the internal cluttering, too much, I know. But that's again for short-term trades, so we keep them there for that purpose. All right, so we are looking now at the 4A, 4B, and a 4C, and a 4C should reject that point, 1.3160. Well, 1.3152. We've done a 4A, we've done a 4B, we're doing a 4C, and that C is a 1 and a 2, 3, 4, just doing a 5, just about to finish. What does this mean? It means if you see a trigger, wait on the 15 minutes, just wait, take it to 5, take it to 3, take it to 2, and once you have negative momentum reversal, time to short. So shows again on the 5 minutes that you had a 4A, 4B, 4C, of course, did a 1 and a 2, 3, 4, still going into a 5. Take it now to 3. Still showing some positivity. And 2 will show the same. So instead of monitoring in a very, let's say, distracting manner and putting too much focus, the best, of course, would simply to move focus on shorting. For C here is level 1. So the best is an entry at 1.3160. I believe 1.3160 is 1.3156, 1.3166. This is probably a wedge, and therefore we get to trip level 1. Trip means spike it and then fall back. So you want to look at the resistances on the 15-minute chart today, and the most probable is resistance 1. Are we going all the way to 1.3170? It's possible because it is the upper boundary of a wedge. So I move higher, do the entry 131.78 is showing here, 131.75 is also possible. We can have a hedge. We're going to do a position trade. We're going to have a hedge at 1. So if I'm in at 131.75, I'm going to have a hedge at 132.25, 131.75 to 132.25 is 50 points. And that 131.75, I'm going to be taking to 130, 1.30 towards the end of the week. And that's end of story. Of course, I can confirm the entry, meaning I can stand down, wait until I have negative momentum on the micro feeds. 2 minutes, 3 minutes, and 5 minutes, any negative momentum that is trending, I can short the market, and the stop is above the market high. So suppose by the time I have negative momentum, I at 131.15, I'll just short 131.15, have the stop at the last high made by the market, say it's 131.60, that's fine. And I'm going again to 150. On dollar strengths, going into the PMIs.